Hey, welcome to the January portfolio update. I hope you'll find the information in this video useful, but disclaimer, please note that this is not investing advice. It's just my portfolio as it stands on Saturday, February 1st, and it can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful since it's your responsibility to do your own research before investing. In this month's bonus section, we'll talk about technical trading if and when I use it. So stay tuned if you are interested in this. But let's not get ahead of ourselves too much and begin as usual with the portfolio activity in the past month. In January, I sold 80% of my remaining Prosus position at a healthy 24% profit, which, if you remember, Prosus was a bet on Tencent because the company was listed as a Chinese military company by the US Department of Defense earlier this month. While I think that this is just America doing American things, I still prefer to take some of the profits and reduce my Chinese exposure, which I still have quite a bit, via Alibaba. My initial thesis of long explosive growth, at least matching the net asset value, was not really true. There is still a discount to NAV, which also actually shrunk relatively to my initial assessment. But I was able to make some money over time by loading on share at the support level and selling them at resistance, which ties nicely in this month's theme. As you'll see a bit later in the portfolio slide, I still have a 0.6% allocation in Prosus, so I'm not completely out yet. I also, this month, sold most of my Tesla shares, only kept one share for the watchlist to de-risk my portfolio. I expect them to deploy self-driving robot taxis and humanoid robots eventually, but there will be problems along the way. Plus, there is the risk of a Trump-Musk conflict, at least a temporary one. So we'll see how it will perform next. On the buying side, I bought a little more of Novafair. I like how the company is managed, plus apparently, so far, the autumn culture seem fine, so it should result in more profits, but we'll see. The point here being getting rid of high PE companies to get a bit more focus on low PE ones. I also added a new company to my watch list, which means I bought around $100 worth of stock, Swedish gambling backend provider Evolution AB. As usual, I also got some altcoins through various Learn and Earn programs from Binance, Revolut, etc. In terms of cash flow, I just got my quarterly S&P 500 dividend for Q4 2024, which should have come last month, but arrived a little bit late at the beginning of this month. Anyway, the cash position is still solid in early 2025. That being said, the portfolio as of February 1st, 2025 is looking like this. Please pause the video if you want to analyze each investment in detail. We're still on the old model, haven't yet found the courage to move the watchlist entries, meaning positions under 0.25%, in another file. We'll see when that happens, maybe later next year. You can see the new position in Evolution AB at row 32, marked here in blue, with a small 0.06% allocation. That being said, the current pyramid allocation portfolio looks something like this. Overall, the portfolio was up 1.52% for the month, and of course, being the first month, it's also year to date. An excellent start to the year if I say so myself. We can see significant decrease in growth stocks due to the sell-off from Tesla and Prosus, and that money is visible in the cash position. Also, the crypto position is knocking on 10% allocation of the portfolio with no new significant purchases this month. Before going to the next section, if you are interested in the subject matter, please leave a like and subscribe to the channel. It really helps bringing this completely free information to more and more people. As mentioned at the beginning, in today's bonus section, we'll talk about technical trading, when I use it and why I don't use it more. So stay tuned if you are interested in this. The main question is, do I use technical trading? And the answer is yes I do. Some examples are, I use it to buy or sell some of the non-core positions when it is hitting the support or resistance levels and the trend is inverse. I use this in two ways depending on the trade. One, to take profit if price is around those levels. So for example, if price is at resistance but expectations are bearish, I take some money off the table. As mentioned, Prosus is one of the stocks where I tend to accumulate and sell quite a bit on support slash resistance amid future bearish slash bullish forecasts. Now, quite a bit for me means I think maybe 5, 6 times in 3 years. And second one, I accumulate if expectations are bullish and price is around the support level. This one I got from Michael Burry, and basically I try to buy within 10-15% of the 52 weeks low because it shows that the price offers some support at that level. Second way I use it is when the price is on an uptrend, meaning higher highs and higher lows, and the 50-day simple moving average crosses above the 150-day simple moving average, and both averages are sloping upwards. I use this method when I want to accumulate more of my existing long-term holdings. Theoretically, I could use it as an entry point as well, but as I mentioned, most of them are already on a watch list. If you are interested, you can find all my investing rules, including the technical ones, in the link in the descriptions. However, all that being said, if you watch some of my previous videos, it might be clear that I'm not a big fan of technical analysis based trading because it doesn't work reliably. The models work until they don't, and even if they did, first I have to preface this that I'm saying that this is not working for out of the box, simple to digest rules only. I am not talking about the Renaissance technology type technical trading with hundreds, maybe thousands of factors taken into consideration real time, but rather about the YouTube simple to digest technical rules presented online. I have been studying technical trading for the past few months with lessons from a Singapore based company, not saying the name, but it's a Fish and Profits, which actually has great content, but you have to know what information to pick from it and what to discard. As a side note, statistics can be bent or used to prove anything. For example, maybe a pattern works when inflation is in range X to Y and there was a big recession the year before and stocks climb more than Z%. If 15 other reasons, but to say that a simple 2-3 variable pattern works is a pipe dream. Please read Daryl Huff How to Lie with Statistics if you are interested to know more. So, why do I believe not only that technical trading doesn't work consistently, but also, more important, why it can't work for you? First, people would not share the rules with you if they worked and made money consistently, especially for free on YouTube or for a monthly sub of $19 or $49. If you think someone would do that, maybe this channel is not for you. Try the Disney Channel instead. Secondly, it would be automated away instantly by high frequency traders who would take all the profits. Read Michael Lewis' book Flash Boys to understand more, so you wouldn't even see the winning patterns in your trading app. Last but not least, assuming somehow 1 and 2 didn't happen, it would get arbitraged away eventually. Example, if selling at the resistance or support or after a certain pattern works, someone will sell 1% above or below that level. Then another person would come and sell at 2% below, etc. And the pattern would break pretty soon after that. Now, why does technical analysis based trading kind of works? Well, a lot of investors are still relying on hype and sentiment to make decisions and then buy in because of a specific news, trend, belief. Example, they announce ChatGTP integration or quantum computing success on some tasks. And then the price goes down since it turns out it takes years to make the profit. But if when the market goes against them, they would not sell at a loss, even though it's clear the initial thesis was wrong. Tesla anyone? That's why resistance exists and kind of works some of the time until those investors capitulate. This is part of the reflexivity theory pioneered by none other than George Soros. Because enough people believe that the price level is important, it actually becomes important. As a conclusion, the main idea is not to completely disregard technical analysis based trading just because I or somebody else said so. Instead, to try to use some of it if you think it works for you, but not get seduced by it either, especially if you're just beginning your investment journey. As I probably mentioned before, my master's dissertation was on stock investing and explored both fundamental and technical analysis, but dropped technical analysis relatively soon. When I use it more, even if my understanding was probably very low, I still made money. Not much, but every dollar or euro is welcome when you are a student. And that's why I like investing so much and why I do this right now. Don't be one of those traders that say, oh, the pattern didn't hold this time, and try to buy more courses to learn new patterns or new tools. What do you mean? To me, it's like, oh yeah, 2 plus 2 didn't equal 4 this time. Well, maybe next time will, because usually it does equal 4. Even if it's probabilistic, let's say a pattern works 80% of the time. Of course, this percentage should be significantly more than 50%. You should focus on portfolio management and bet 10 times the same amount, let's say 1% of your portfolio, and see does it hold that percentage? What happened when you won? What happened differently when you lost? Trading is a full time job, and the trader mentality, which is short term, usually doesn't bode well with the investing mentality, long term, and sometimes I have a problem switching between the two. Can you separate them correctly? There is a saying traders would sell their mom and buy it back cheaper later. Is that the type of investor you want to be? Can you be a successful one at that? Please let me know down in the comments and have a great month. Au revoir.